Welcome to it, looking at the markets picture. Starting off with things in Asia, there was a little bit of a muted performance there, a little bit lower after the S&P 500 managed to reach another day of record highs. Looking at what's playing out there, starting off with the Hang Seng Index, we'll get that on screen. That was down marginally, about 1%. And over on the mainland Chinese shares, also a bit of a mixed performance on that front. They closed slightly lower with the Chinese composite down 0.9% and the Shenzhen composite down 1.2%. Over in Europe, we did see markets moving slightly lower. And again, they are searching for direction. And of course, this is again after touching those record highs that we did see in the previous session. Looking at the U.S. futures right now, they are muted as well. And looking at the, just going back to those European markets, the FTSE 100 down marginally, the French CAC up about 0.25%. Over in at the JSE, that is at around 925. We did see the JSE a little unchanged, but the financials managing to move up about 0.25%, with the precious metals that is down about 1.25%, and of course the financials, the banks, up about 0.3%. But we'll get into that detail with our market watcher Warwick Lucas. But also looking at the precious metals, starting off with gold. That was down 0.5%. Right now, it's at $1,746. Platinum lower, down 1.6%, and a barrel of Brent crude lower as well, down 0.25%, or rather down 0.1%. That is $63 a barrel. Now, to get into those actual markets, we are joined by our market watcher Warwick Lucas. While we get him on the line, what is interesting on the U.S. front is that there's this new conversation happening around corporate taxes. And there is a little bit of excitement coming in from the European side, because if we can actually get the consensus going on the same trajectory when it comes to corporate taxes. And of course, this is a conversation started by U.S. President Joe Biden and, Treasury Chair Janet Yellen around how we can move U.S. corporate taxes from 28% to 21%. We'll see how that unplays and unfolds with all the other G20 countries. But let's look back at those JSE markets, and we are joined by Warwick Lucas. Warwick, thank you so much for your time this afternoon. How would you digest the current market performance right now?
Right. We've had a fairly good start to the week after the Easter weekend, and that has basically tapered off during the week with a combination of some quite choppy trading and a somewhat firmer rand. I think that firmer rand generally has enjoyed a certain amount of strength thanks to the commodities complex as a whole, which have generally held up quite well. In fact, after, I would say, a pretty good year. And the big news of the week really was that Naspers and Prosus impending sale of the 10-cent stake. It's about 2% of 10 cents, which is still a whopping $18 billion that we're looking at there. And the intention there is basically to use the proceeds for either new ventures within Prosus and or to buy back their own shares. If they can't find an investment that pays back well enough compared to their own share price, back into its own shares, it'll go.
All right. One of the other, news events was the FOMC minutes, and I'm not quite sure whether the Fed managed to sort of bat away the fear of taper. But when we come to that, if we ever come to that, do you think we'd be able to see clear signals of when taper would start to kick in?
Okay, so in recent years, we've had an ongoing shall we say, expansion in so-called Fed speak, which is the kind of language that a central bank will use to communicate to the public as a whole. And generally what that might entail if they're moving towards tapering is really a series of incremental edging towards changes. So they publish things like dot plots, which is really just what each individual member of the Fed thinks the interest rates going forward are going to look like, what the voting records, and then careful choreography in the wording. I should add that basically the Fed, well, particularly the president there, has indicated that he wants multiple months of steady job gains. So I think that Powell is really looking for a recovery to be quite firmly underway before he starts any notion either of tapering off in the first place and then subsequently starting to hike rates at all.
You were talking about interest rates, and it brings me to the next question about U.S. stock valuations right now. What do you make of those? Are you expecting more upside?
Look, I think they've been quite frothy, and what we really have to see now is that earnings basically have to catch up to those share prices in order to justify them, and perhaps they will. I mean, certainly the kind of GDP forward prognostications that we're seeing, both internal forecasts and the likes of the IMF and so on, are certainly for very big recoveries in earnings to come through. But obviously, seeing will be believing, and we've got to see those come through. And if those catch up, it'll put a floor under those share prices. And if they don't, well, then I guess some kind of a breather is going to be in order, and the markets would need to pull back a little bit.
Speaking of earnings, earnings week in the U.S. kicks off next week. Are there particular companies or company that you always look out for when that season kicks in?
Look, I think that what is certainly notable is how different sectors have had different performance. I mean, more cyclical companies such as manufacturers or materials producers or someone like a builder has had much more cyclical earnings, and obviously they took terrible hits when the COVID crisis started to unfold, and they're going to be the ones that we'll be looking for the biggest recovery. And then, of course, given how large technology is in terms of the whole US market, we're obviously going to want to see that those businesses actually do persist with reasonable earnings growth that underpin those pretty stellar share prices. So it's a fairly important season, earnings season, and it could be potentially quite noisy because it could be a big gap between assumptions and realization, both on the up or the downside.
All right, Warwick, thank you so much for your time. That is Warwick Lucas from Galileo Capital talking to us about the markets picture at the JSE right now, but also throwing forward in terms of his expectations for next week's U.S. earnings seasons. That's it for me for now.